What's up, everybody? My name is Adam Bergman, and I'm going to give you a really quick video. I don't like to talk about Palantir on the weekend because I have so many other things to speak about, but nobody watches any of my videos unless it's about Palantir. And I love Palantir and love making Palantir content, but I wish 80% can be Palantir and 20% can be something else. So I'm trying out some videos on the weekend to try to get things off of my chest because weekends are not really prime time. Hopefully it's going to catch some traction and I could speak about other things besides for just Palantir. Although I absolutely love Palantir. All right, let's talk about investing. Right now, all stock markets are down. Most stocks are still overwhelmingly down. Most ETFs are overwhelmingly down. Whether you're talking about technology sector, whether you're talking about blue chip names that you know about, or whether you're talking about very risky plays, even dividend plays, everything is down. Right now is a down market. We've been down for over a year now. And the average bear market lasts right around a year. So we're actually on average longer than where we're supposed to be. But again, average doesn't really mean anything because average could mean 2 months and average could mean 20 months, right? But I do believe that we're in the second wave. We're in past that hump of this bear market. Is there gonna be a retracement? Quite possibly. However, it seems like inflation is going down. So you gotta ask yourself a question. Where would you like to invest your money? The first rule of investing is don't lose money. Wherever you invest your money, don't lose it. So I was always very aggressive with my investing, although right now I'm taking a break. That aggressive style of investing did me very, very well until 2022. And then 2022, I miscalculated and it didn't do as well as I would like it to do. And I actually lost. And that's okay because I'm rebuilding. What am I trying to get at? When you're 20 years old, you should be as aggressive as possible, in my personal opinion. This is not advice. At 30 years old, you should already have something and start investing in something more sustainable over the long course, like your first home maybe, and still be very aggressive with your investments. At 40 years old, you should already start having something in your life and still be aggressive, but not as aggressive. Definitely bring it down a notch. And at 50 years old, I think you should be not aggressive at all with your investment and just collecting passive income, residual income, dividend plays, rental income, things like that, right? So 20 as aggressive as possible, balls to the wall. 30 still as aggressive as possible, balls to the wall. However, you should have already been saving up and buy something substantial. So also balls to the wall, but something substantial. By 40 years old, you should already have something under your name. You should have something under your belt in terms of a nice portfolio, whether it's stocks, crypto, real estate, precious metals, things like that. And you should definitely bring it down a notch when it comes to being aggressive. And at 50, don't be aggressive at all because if you did it right this entire time, you don't need to be aggressive. The only reason you should be aggressive when it comes to investing is because you have nothing, so it's easier to risk everything if you don't have a lot of it. But when you have a lot of something and you did things right, it's very hard to be aggressive because you don't want to lose it. So there's an accumulation stage, and then right at this point right here, there's a I don't want to lose what the fuck I gained, okay? So right now, you got to ask yourself, am I in the accumulation stage or am I in the defensive I don't want to lose what the fuck I got? Once you answer that, you can have a better understanding of what kind of investor you should be. Again, my own personal opinion, what worked for me my entire life and what's still working for me and allowed me to recover with this 2022. That was really bad for a lot of people. Most people won't talk about it. I'm super open about it. And I was able to recover and recovering right now. Since the first rule of investing, and most of the people watching my channel are younger than me, right? I'm about to be 40 years old. I'm an old fuck, but a lot of people are younger than me. And most people are just getting into investing. And I know I'm gonna get a lot of slack for this. If you are a younger individual, okay, invest as hard as you want. However, try not to lose your money. What does that mean? Allocate funds into definitely high risk, high reward plays. What's a high risk, high reward? Palantir is a high risk, high reward play. Tesla, a little bit less risk, high reward play, right? Things like that. What is a solid play? A solid play would be a Google, a Microsoft, an Amazon, a Walmart, an Apple. Meta is up there too, right? Things like that. These are established brands, established companies, and you can interchange everything that I'm saying. Just understand the concept. Those are established brands and companies that are making a shit ton of money. And I guess Tesla can start coming in here, except Tesla trades at a very high multiple because you're paying for what Tesla will be in the future. These companies are already established, and you're not paying for what will happen in the future. You're paying for already, you know there's gonna be steady growth, okay? In your portfolio, if you are scared to invest, because a lot of people are just overwhelmed and scared, they don't know where to start, and this is basically where this video is going to. Just invest in steady stocks. Invest in your Google, invest in your Microsoft. I don't like Apple personally, but I guess Apple could be in there, Amazon could be in there. Invest in companies that you're not gonna lose money with. Now, that doesn't mean you're not gonna lose in the short run, but that means that most likely, and anything's possible, most likely in the next decade, you will have a lot more money than where you started. However, you won't have that huge risk, but you're not gonna have that insane reward. There will be rewards. You're gonna double up, maybe triple up, but you're not gonna get a 10x on your money, and that's okay. So if you are new to investing, and you literally have nothing, you could take risks. But the second you start getting something, you might want to put the brakes on and diversify your portfolio into very high risk, but also, hey, let me not lose everything that I have. And I'll tell you why. If I would have been 100% high risk, right? And I'm 39 years old, so at 38, 39, if I was 100% high risk and I didn't have sound investing background of years that I did right, I would have been decimated in 2022. I would have had nothing left. But because I was smart with my investments and I had a lot of capital allocated to safe bets, for example, real estate and other plays, I was okay and I'm able to recover. So be very, very careful. But if I was in my 20s and this happened, I would have been decimated, but I also wouldn't have had capital. Because I was closer to my 40s, starting at around younger to mid 30s, I started putting the brakes on, getting prepared for 40 to then really put the brakes on. Now my plan changed a little bit because of 2022, it wrecked me, but you understand where I'm going with this? The name of the game is do not get wrecked. However, if you have nothing to get wrecked with, go balls to the wall. But the second you have something, you need to protect your capital. And that's all I wanted to talk about. So 2 things. Protect your capital, be as aggressive as you'd like to be, but try to put yourself in brackets. 20 years old, 30 years old, 40 years old, 50 years old, and it could be younger and older, and breaking down any which way is good for you. But have yourself a plan when it comes to investing, okay? Don't listen to anybody else. Don't listen to me including. Just use things as guidelines. Anybody that says something to you that sounds kind of smart, just use it as guidelines, okay? And then do your own research. And number 2, start investing. Start investing. Right now is the best opportunity that you're gonna get in a long time, maybe in your generational lifetime. Why? Everything is so fucking down. This is one of the worst downturns for stocks in a while, and you don't know if this is gonna keep going, and more so, you don't know if it will ever happen again once it starts recovering. I'm not saying there won't be a downturn. You don't know if it's gonna be as bad as it is now, because we are in an official bear market, 20% down, right? And some stocks were so absolutely beat the fuck up that you have amazing opportunities to invest in them. And if you're scared to invest in high risk, high reward, just go with a Google, go with an Amazon, go with a Microsoft. Those are great products to invest into. For my son, for example, he's young, I'm building him a portfolio. Of course I have Palantir for him. Of course I have him some Tesla. I also have Nvidia, I have Unity, but guess what? I also have a Google, I also have a Microsoft, I also have other investment vehicles because I want to make sure I don't lose his asset allocation in the future. And he's going to be able to capitalize on any bear markets, any bull markets, and over the course of the next 18 years for how long I'm building his portfolio. Guys, thank you so much. I have another video down below. I'm sure you guys would love this. Click on the video down below if you want some more really cool entertainment, knowledge, data, and let me know if you guys want videos other than Palantir in the future, but I'm not stopping Palantir because I fucking love it. Have a great day.